Hey, it's Eric Fritz with Elevated Wealth Management, and today I want to talk to you about something that you probably haven't heard anything about over the past 2 weeks. It's the coronavirus. I say that jokingly. I know that you're all probably sick of hearing about it. It's all over headline news. It's all over your social media. It's the first thing you see when you wake up, probably the last thing you see before you go to bed at night. But I want to talk to you about that, and I want to hit it from a little bit of a different vantage point or a different perspective, and because I think it's telling us something. It's telling us something about the markets that the media is not really covering. I think that the markets are priced to perfection right now, and this is definitely evidence of that theory. If you go back and you look at the market last week, it was down, over 10 to 15%, depending upon the benchmark you're looking at. The worst week that the markets have had since 2008. Followed up by Monday, the biggest one-day gain the Dow's ever had in history. And then followed up by Tuesday, another 1,000 points down, and then followed up by today, Wednesday, and the markets are wherever they're at, up 500, up 1,000. I don't know where they're at today, but they're all over the place. And, I look at that and I say, there's not a lot of fundamental information that's being used to price these markets. So the markets are priced in two different manners. One influence of market pricing is mathematics and its fundamentals and its price to earnings ratios and all of that stuff. And then the other thing that influences market pricing is investor behavior, and that's based upon a lot of times emotions, fear, greed, etc. So we have our emotional side of our brain that causes us to make decisions, and we have the logical side of our brain that makes decisions or helps us make decisions, and both of these kind of impact and influence how the market's priced. And so when I go back and look at the history of our markets, especially the last 10 years, I look at the U.S. markets specifically, and you've got the Dow Jones up over 150% in the past 10 years. And you've got the S&P up over 170%. You've got the NASDAQ up over 280% over the last 10 years. And I look at all of the things that have been put in place to help incentivize market growth or influence market growth. Things like Federal Reserve rates being at historical lows, and we tried to raise the rates up. The Feds did a couple of years ago, and then all of a sudden we started bringing them back down because there was too much market volatility associated with that. We had a 50 basis point rate cut on Tuesday because of the coronavirus and the Fed's trying to help stimulate the economy. And so I look at all of these things and I think, this is basically showcasing to us that the markets are priced to perfection. And if you're driving down the road at 80 miles an hour and you hit a speed bump, it's going to feel a lot different in your car if you're driving down the road and you hit a speed bump at 10 miles an hour. So you're starting to feel the impact of different things a lot more harshly if things don't go perfectly. And last year the markets were up 20 to 30% depending upon the benchmark you're looking at in 2019 alone. We've got the elections that are coming up next year, and perhaps an administration change that could impact the markets or influence the markets to the good or to the bad. I don't know. You don't know. We all have our assumptions. But the fact of the matter is, fear is going to be driving a lot of the markets over the next couple of years and not necessarily fundamentals. And so at this point in time, I have to say now more than ever is a great time to look and review your portfolio with your advisor, and not only with your advisor, but perhaps another advisor, somebody else that you trust that would be able to give you an unbiased second opinion and be able to just look at what you're doing and what your goals and objectives are and just give you a sense of whether or not you're okay where you're at, or you might need to make some adjustments or some changes because a lot of things might look different in our markets over the next 2, 3, 4, 5 years than it has over the past 5 to 10 years. And you just need to be prepared for that and know how you're going to react to that on the front end. So hopefully that's some good perspective for you to look at. I hope you took some valuable insight. And if you want to talk further about this, feel free to contact our office. We'll be happy to have a conversation with you and see if there's any way we might be able to help you out. So God bless. Hope you guys have a great day.